What's up, everybody? Joshua Salvetti. Welcome back to another lesson of the High Performance Trader. And today, in this lesson, I want to break down, how I'm able to identify the market story through market structure and how I'm able to then trade with the correct momentum of the market, right? See, in my past, I used to struggle a lot as a day trader because I was constantly trying to predict things, right? So a lot of people get this confused, right? And they have the improper belief that to become a good day trader, you must be able to predict which way price action is going to go, right? You must be able to predict what's going to happen, right? You must be able to predict if it's going to go up or down or sideways or whatever it may be. See, that cannot be any further from the truth. And in this lesson, I'm going to explain why, right? See, when you're predicting the market, you're constantly going to be trading from a state of uncertainty, right? Because I don't care who you are, nobody can tell the future, right? I don't care what anyone claims, right? You cannot predict what the stock market's going to do. So instead, you must be able to become the trader that can react to what him or her is seeing, right? So we must learn what to look for. We must learn to understand the market story. We must learn to watch price action as if it's a book and go, okay, based on what's happening at specific levels, this is showing me buying strength. This is showing me selling strength, right? And I'm looking to trade with who's currently in control of these levels to put on a higher probability setup, right? So in Trader Bootcamp, I break down trading with the banks, right? It's so important, right? Because once again, we must be able to approach the market from a state of reacting, right? We must be able to go, listen, I can't predict price, I can't move price, and I understand that I can't move or predict price. So with that understanding, I'm now going to trade in a more reactive state, meaning I'm going to learn to watch and understand what I'm looking at and make moves based off that information, right? So the day I'm going to be breaking down is Thursday. Let me see real quick, actually. This is Wednesday. Okay, so it's going to be Thursday, May 9th, right, 2024. And this is where, once again, the critical levels, the pint numbers that I'm constantly talking about come in to fruition so much, because understanding market structure with these pint numbers is going to give you such a good edge, right? So once again, on a much larger time frame, right, if I pull this chart up, which you're going to see, and I zoom out, right, price is kind of gradually up towards the upside, right? Now, basically, in a nutshell, there's two things. This is how I teach to my clients. There's two things that can happen at these levels. So first things first, let's identify the level, right? So over here, right, I'm going to take, bear with me, I don't usually use TradingView, but Thinkorswim is currently down. So this is going to be an important level to me, right? Why is this level important? Because the last time price was at this level, which was the previous day, right? So when price was at this level, we got selling, right? So we could put a line there. We could even put a little rectangle, right? Make it a supply zone, right? So now, hold on. Okay, so now as price is hitting this level in pre-market, we're getting some selling, right? So what's this telling us via market story, right? Because the purpose of this video is to learn to react. Okay, so we must understand at previous day high, right? We got previous day high right here, and we also have end of day, which is right here. Okay, so let's label those. We have end of day, we have previous day high. Two very important critical levels, right? The pint numbers, previous day high, previous day low, end of day, and the open, right? So we have two very important levels very close to each other, right? They're within 40 cents of each other. So what happens at these levels is going to paint us a picture. Why? Because all the volume there. There is a massive amounts of volume at the previous highs and at the closes, right? So once again, we must learn to understand what the banks are doing. So for us to understand what the banks are doing, we must follow the volume, right? And what market structure tells us is we're either going to get a double top here, right? Price is going to come into resistance and sell off, right? And then maybe we come down to pre-market low, and then maybe even previous day low. So that would be my bearish scenario, right? My bearish scenario would be sellers control 517.70, and we get a move down to pre-market levels such as 516.42, pre-market low 515.87, and then previous day low all the way down here, right? So that right there would be my bearish analysis. So I'll put a little level right there, boom. So that would be my bearish target overall, right? You don't have to hold until previous day low, but I'm going to paint that picture in my mind so that I can react throughout price action throughout the day and trade towards that level, right? My first target would probably be pre-market low. Okay, so now the bullish scenario, because once again, the market's in a uptrend, right? It's been going up. Now we're moving sideways. We're consolidating. So now I got my eye on in bullish scenarios. I'm going to grab this level right here. And then I'm going to obviously pull other levels from a much further time frame, right? So now the market opens and we start to get some selling. Now, for me to understand, right, the conditions, I must move to a larger time frame, right? So this right here is May. Okay, so May 9th our day. So once again, we're going to whip out the 1 hour. And now we're going to look at this and go, okay, what's happening overall, right? So it looks something like this, right? So we're ripping up towards the supply zone up here. 519.62 would also be a bullish target right here. You guys see where I'm getting this, right? I'm just pulling from the tops, right? That's going to be a target. This is going to be a target, right? Once again, we don't know what's going to happen. We're just painting a bullish scenario. We're painting a bullish picture. We're not getting super analytical about it, right? We're not overcomplicating it. We're sitting back and going, listen, hey, if buyers can control previous day high and they hold bullish market structure, I'm going to then target 519.52 and 519.89, right? But if sellers control this level, I'm going to react to that information and then I'm going to target previous day low. It's a 50-50 scenario, right? Keep it that simple, right? Otherwise, you're going to overcomplicate it, right? So so now I'm going to go, okay. So for me to really be bearish, I obviously want to see selling below pre-market low, right? I'm going to make that, that's going to be like my level because I don't really want to fight the overall conditions of the market on the 1 hour time frame, which is extremely bullish. I mean, we're ripping, price is very strong, right? We're also holding this level right here, right? So once again, the larger time frame analysis is going to be your best friend because it's going to help you understand, hey, buyers are building their own structure, right? Sellers were here, price rallied past it, right? And now we're retesting that old supply, which is now demand, right? The people that went short here are starting to stop out here, right? Now, once again, don't got time to really dive into why that happens, but in a nutshell, there's massive amounts of volume right here. So when this large seller gets into the market, for him to stomp out of his position, he needs a lot of that same volume, right? So once again, he may stomp out a little here, but then when price comes down for that retest, this will provide him a lot of liquidity to get out of the large position he entered right here. Hope that makes sense. It's very important that you understand this. Once again, in Trader Bootcamp, I really flesh out the break and retest and the price psychology behind it, right? So once again, the seller that went short here is now stomping out of his position here, adding to the overall bullish market conditions, keeping me from shorts until we get below pre-market low. Okay. Back to that 5 minute. Okay, so once again, now I got more of an understanding of what price has done on larger time frames and what to expect. I got my upside targets, downside targets. Once again, I really don't want to short the market. I need sellers to really prove to me they want it, right? Which means just because you get a red candle here off pre-market, previous day high, doesn't mean short the market, right? So for me to really get into positions, I need to see the opposing side lose, right? So I really want to see buyers lose, and that means I need to see a bullish chart pattern get invalidated. Same with selling. So for now, since I'm overall bullish on the larger time frame, I want to see these sellers lose so that I can then go, hey, sellers tried, and now I'm trading with buyers. Okay, Josh, how do you do that, right? I do that through looking at chart patterns, right? So once again, for me to take the market short here, we have open print, which is a very important level. We have end of day right here. I'm actually going to get rid of end of day, and we're going to focus more on open print, right? So once again, I want to be in the business of reacting to price action, right? So for me to react to price action here, I'm going to watch sellers reject pre-market or previous day high, right? And now come up for that retest at open print, right? So you see this retest at open print. There's one reason why I didn't take this short. I didn't take this short because the candle right here at 9:45, right, started at 517.25, right? Now, we got some consolidation. Buyers rally back up to open print, and we broke the high of this candle, right? So this is what one of my friends, Todd, calls a bull 180, right? So a bull 180 is when this candle completely wipes out the candle in front of it. Once again, this is how you start to understand who's taking control of the level, right? If sellers were strong here, we wouldn't really have gotten that much strength above 517.22, right? Instead, we got this large move right into 517, right into open print. And once again, the overall conditions on the larger time frame were bullish. So I was more ready to let this open print retest pass and instead sit back and let the market tell me more. And right? And now if this bearish chart pattern off open print, right, this break, this retest got invalidated, right, that's telling me sellers just lost. Now I'm in the business of trading with buyers, right? I don't just hop into the trade. I let it manifest. I let it do its thing. I let it come back to the critical level. Look at previous day high here. So sellers losing open print, that's my really big, like, okay, listen, all those sellers at open print just lost. They need to start stomping out of their positions. Where were they? They were getting in off previous day high. So now we rally above previous day high, come down for that retest. Once again, the people that went short here are going to start stomping out of the market. This is where I take the market long. My stop loss is going to be below open print, right? So I'm getting in this trade at 517.60, and my stop loss is at 517.37, right? Maybe a little under. So I'm literally risking 37 cents here, right? I'm risking 37 cents here for a potential move up to 518.57 and then 519.52, right? And guys, this thing rallied right up to our target, and we absolutely crushed it, right? So learning to understand, once again, who's in control of the market, right? Sellers trying, but losing. Where is this happening, right? Which critical level is this happening at? How can I react off this information instead of trying to predict what the market's going to do today, right? Guys, hit a like, subscribe for more content, hit the links below. I'll see you in the next lesson.